Ask an expert. Your questions answered by qualified professionals. Informative and insightful. The Ask an Expert series, presented by Penn Mutual. Here's today's question. How can employers attract and retain key people to ensure business continuity?
How can employers attract and retain key people to ensure business continuity? Non-qualified executive benefit strategies are commonly used to do that. They keep the key employees tied to the business while they're supporting the long-term business continuity. Now, the three common approaches generally include the executive bonus plans, split dollar plans, and non-qualified deferred comp plans. First up, we have the executive bonus plans. Now, these plans are designed to provide death benefit protection to the employees and also give them potential for cash value accumulation on a tax-free basis. The employer pays the premiums and they're able to deduct them, so they're kind of popular. And on the other side, they don't get anything back other than the deduction. So there is a trade-off there. But it does provide that death benefit protection for the employees' families and that potential for supplemental retirement income. Next up, we've got split dollar life insurance plans. Now, these plans have been around for a very long time, and they're very similar to executive bonus plans in that they provide a death benefit for the employees' families and also the potential for cash value accumulation in the policy. Now, they're different in that the premium payments that the employer makes are not deductible for the employer. However, they do have cost recovery. So if the employee should leave or if they pass away, the employer would get their money back from either the cash value of the policy or from the death benefit. All the while the plan is in effect, they have a balance sheet asset equal to whatever the employee owes them, which is typically either the sum of the premiums paid or the total cash value of the policy. So these are still very popular plans. Last up, we have the non-qualified deferred compensation plans. Now, these plans have a focus on supplemental retirement income. So very important plans, just like business owners, key employees really want to be able to ensure that they've got the ability to retire comfortably. So, that is a key feature. That's now, while they don't have to be funded, in fact, they're only informally funded, but often we use life insurance to informally fund non-qualified deferred compensation plans. The employer will own the policy and all the cash value that's accumulating in it. And if the employee should die, they receive the death benefit tax-free as long as everything was set up properly. Now, of these three plans, we most often see executive bonus plans be the most popular. And that's really for a couple of reasons. First of all, the deduction. The employer paying the premium gets that deduction. And typically, the first question a business owner is going to ask is it deductible? Well, this of the three plans, the executive bonus plan is the one plan that we can say the current premium payment is deductible. So it's very popular for that reason. Another reason, too, is of the three plans, the executive bonus plan tends to be the most simple to implement and administer. Split dollar plans are fairly simple. And non-qualified deferred compensation plans, they're a little bit more complicated. They do require a TPA to track all of the benefit liabilities. So the executive bonus plan is very simple in that regard. And for that reason, along with the deduction, it makes it very popular. For more insights, sales ideas, and marketing content on business planning strategies, or if you have a specific case you'd like to discuss, contact the advanced sales team at Penn Mutual at advancedsales@pennmutual.com or 1-800-818-8184, option 8.